John Kirkland is with us finally. We got our, the only glitch we had all day, by the way, in the new studios, which is took us a whole year before we actually got on the air on the last one. So, John Kirkland, of course, a managing partner of Ironridge Global. It is a small cap institutional direct equity investor, meaning that they basically are in the business of putting money in place to small cap companies who need to find financing. In other words, in the publicly traded game, there's only one way to raise money, and that's through the sale of stock. And when you don't do it through the public market, in other words, when you don't do an IPO or a secondary offering, you do it through private placement or private equity. Ironridge Global is such a place. John, welcome to the new year. How are you, sir?
Good, Sully. How you doing?
Great to see you and great to talk to you again there. Hey, so 2014. For the major equities market, people are wait and see because we got a new Fed chairman. What is the difference between what's happening in the big broad market and what's happening in the small cap institutional market?
The two markets are almost unrelated because what's going on in the big picture rarely impacts the little companies, other than negatively. It's really the positive guys need to be an individual company that is successful, and that's how they raise money.
And you
can't raise money as a little company based on what's going to happen in the market as a whole.
So you guys are essentially ignoring when you're making your decisions on getting involved in a company. You're ignoring big market metrics, right?
Yeah, we don't follow the macroeconomics at all. We make it individual company decisions. Period.
Okay. Now you guys have invested. Several $100 billion in public company financings over the last 20 years.
How's that working for you?
Yeah, well, it's obviously it's obviously working well for them, I would say. John, are you guys? What are the biggest changes ahead, John, for investors?
I think the markets are going to become more and more heavily regulated, and it's going to be more and more difficult to find good bargains as a result.
With respect to that, can individual investors take some of the same philosophies and the same disciplines that you do when looking at alternative investing?
I think they can. I think the biggest thing that individual investors can do is to invest and hold. The biggest mistake you can make is to try to time the market. It's the Warren Buffett, I'd rather get a fair deal on a great company than a great deal on a fair company. You've got to pick a good investment and then stick with it.
John, what are you seeing now? I mean, because even in this show, we've seen when PR people have come and tried to get us to interview companies. We saw a slew of oil and gas companies. We saw a slew of biotech companies. And we saw a slew of alternative energy companies. What are you looking at now?
Flying cars?
Well, across the board right now, the biggest growth for any company is in its green sector.
So the clean
if any
clean
company's
tech
got
sector.
a green product, that product is likely to have 70% more sales than a regular product.
Wow.
So we look for anything green.
So now, not just energy though, correct?
Anything green. If you're any kind of a company and one of your products is green, it's going to sell the best. Consumers are demanding it. So we look for companies that are green focused and for individual products within industries that are green focused.
There was a 60 Minutes special that came out a couple weeks ago talking about the clean energy sector that was disappointing financially, and that they're looking for a big turnaround. Do you attribute sort of the same reason that the analysts are looking for a turnaround in the clean energy sector to be sort of the same reasons you guys are focusing on clean product sector?
Well, what they're talking about is a timing issue, that at the beginning of any industry, you're going to have a huge number of failures and a very small number of successes. In the 2001, everybody was investing in internet stocks. And now you've got Google, Yahoo, and Facebook, and nobody else is left. So they had a huge ton of money go into green tech. Most of them failed, but that's to be expected. 9 out of 10 are going to fail, 1 out of 10 is going to succeed, and so the failures are by the wayside. They're now looking for the successes to start to generate profits.
With respect to some of these companies, John, you guys, and you've been in this studio before, and you've been on air with us and talk about the risk factor, but you're also talking about the reward factor. This type of investing is not for everybody, correct?
I think it is for everybody, but only with a portion of the portfolio. I think 5, 10, 20% of everybody's portfolio should be on this kind of stuff. Because you need that high return to generate the growth in the portfolio.
But you need a huge appetite for risk.
90%.
But you need a huge appetite for risk.
I think you do, but you need to have a portion of your portfolio be high risk. The biggest risk is no risk. Put all your money in a savings account and earn 0.1% interest, and you're guaranteed to lose.
Yeah,
I think everybody should be doing this, but not with 50 or 80 or 90% of their money with 5 or 10 or 20% of their money.
Isn't there some formula, like you take your age away from how long you plan on living minus what you have in the bank, and you get the amount you should invest or something in a high risk?
I think that's in a personal portfolio.
Yeah,
but with respect to
the big guns.
institutional. John, we'll get your butt down here to the new studio, buddy. We want to see you face to face next week. All right, pal?
All right, I'll bring my butt and you can look at it.
There you go. Fantastic. John
All
Kirkland.
right, that did it. Show's over.
Ironridge
That
Global.
did it.
IronridgeGlobal.com, and one of the smartest guys in the business.